check, mic check. Mic check. Good evening, good evening, good evening, everybody. How y'all doing? Hopefully everybody doing well this evening. What y'all got going? Okay, camera. What y'all got going on? We here. Took us a little bit of time to get in here, but we here now. You hear me? Hopefully everybody doing good this evening. Again, like I said, good evening. If this first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo Espanol. And you are now in tune to another episode of The Intraday Price Action Recap. Yeah. What's going on, man? Who up in here? Who we got up in here today? Who up in here today? Today. We got Jim over there in the Zoom. We got Jim in the Zoom. Jim in the Zoom feeling lonely. Ain't nobody in the Zoom with you. Why everybody be avoiding the Zoom? Everybody want to avoid the Zoom. They scared I'm going to ask them a question. Everybody want to avoid the Zoom. What's going on? Shout out here to Learn and Share. We got Honey in the building. We got Rhonda Green in here. We got Latasha up in here. We got Sonia up in here. How y'all doing, man? We got Valentine up in here. I got all kind of commercials popping up already. They go crazy with the ads on YouTube. YouTube make it unbearable to watch, man. They try to add you to death to make people not want to look at your videos. Like, how this video gonna be up? How it's gonna be on for 7 minutes and it's already popping up a ad. I ain't even did nothing yet, man. Sick of it. All right, man. Did Price do anything to catch anybody off guard today? When you were watching the Price action for the day, did Price do anything to catch anybody off guard? Were you expecting Price to go left and Price went right? Did you expect Price to go right and Price went left? Right? Did it catch anyone off guard? Let me know. Let me know. Let me know. Let me know. Trying to get my camera straight. All right. What I'm going to do here, I'm going to copy the Zoom link. I'm going to paste the Zoom link in the chat, and I'm going to pin it at the top of the chat. The Zoom link is pinned to the top of the chat. If you have anything you would like to comment, say, or anything like that, please click on the Zoom link and unmute and say, Tim, I have a comment. The chat and everything is on this screen here. I will be looking at this screen over here. So I will not see anything that's in the comments. It can be Zoom comments or YouTube comments. I won't see them because I will be looking here. If you have something you want to ask, please join the Zoom and say, hey, Tim, entschuldigen Sie bitte, but I have a question or a comment. All right. Let's go ahead and share the screen. I don't see anything. I don't hear anybody saying that price caught them off guard or anything like that. So, oh, let me go send out the bat signal. I ain't sent out the bat signal. Just in case people don't be getting the notifications. Oh, excuse me. Man, I got too many channels over here. I got too many channels over here. Where is the? Oh, there it is. I'm looking too low. Zoom links. Okay. Bat signal is sent out. It's time to get to it. All right. This is today's price action starting here at this rectangle, this purple rectangle right here. That is our new week opening gap. That new week opening gap is a bearish new week opening gap, meaning we from Friday's close to this open at 6 p.m. on Sunday, we gapped down. There was a downward gap in price from the closing price on Friday to the opening price on Sunday. I'm moving my microphone in this direction because this is the way I'm looking. Okay, so we got a bearish new week opening gap here. Okay, if we zoom out, right? If we zoom out in price, squanch the chart up, as I like to say, right? We can see how, we spoke about smart money reversal, the low risk buy, first area of accumulation, right? Second area of accumulation. And then we came up above this high there, completing this market maker buy model. But in the larger market maker buy model that started here, right? We still have not completed that. And that right there would be the target to complete that market maker model. Okay. This yellow line here, that's a monthly high, right? We are working that monthly high. We worked from below it. Now we're working from above it. Okay. We're engineering liquidity here at this prior month's high. This is typical algorithmic activity. When you take out a higher low, right, the market will tend to go into a consolidation pattern where it's engineering liquidity at that old higher low. And that's what we're doing there. We're engineering liquidity there at that prior month's low. This is a higher time frame PD array. And then if we look, right, if we look at price, zoom out and look at price, as you can see the true day, right? This is the start of the trading session after the halt. This is the start at midnight. So our midnight price and our closing price is right here, very near equilibrium of yesterday's price range. And as you see, yesterday's price range is our current dealing range, right? Yesterday we came down, right? Taking out sell side, creating a low. We traded up, took our buy side, creating a high, right? Whatever price resets like this, taking out buy, sell side and buy side, that gives us a new dealing range, and 50% between the lowest low and the highest high of that dealing range will be equilibrium. Equilibrium is just eyeballing it here. It's somewhere right around there. We get our Fibonacci tool to get the exact spot, right? The exact spot is at 20,013 and a quarter. That's the exact equilibrium, right? Like I said, it's right around here, right? So we opened up midnight right here, very near equilibrium, and we close the day at 5 p.m., very near equilibrium. So price is just still in the middle of the road. We're still in the middle of the road, right? Earlier today, or this morning, last night, I had some other PD arrays on my chart that I no longer have marked out right now. Do I have them in? Nope, I don't have them in here anymore. We had, excuse me, we had a bearish fair value gap over here. The close here is 316.50. Open Street says the same. Okay, so we had a bearish fair value gap there on this hourly. Bubbly brown sugar. And then we had a bullish fair value gap here on the hourly. All right. And so we had this bullish fair value gap that's supporting price, right? And we had a bearish fair value gap above us, right? So we in between opposing PD arrays, but this bullish fair value gap has been supporting price. It's designed to support price, right? Price came here. This is our dealing range there. We focus on the last impulse leg of the dealing range, right? This is the discount PD array, discount imbalance of this impulse leg right here, right? And it's doing a good job at supporting price thus far. Price is not showing a willingness to want to slide down past it yet. Okay, doing a good job at supporting price. Now that we have set a new daily low and daily high, right? What type of day was today? Just looking at today's price. Remember, we said this is what started today's price action, right? And we ended over here. What type of day was this right here? Who can tell me what type of day that was? Hmm? Who can tell me what type of day that was? Hmm? I'm listening. I'm listening. No takers. No takers. No one's gonna tell me what type of day today was. Not a nothing burger. What type of day was today? This is yesterday's low and yesterday's high. Inside day. Very good. Shout out, honey. All right. Shout out, honey. Shout out, Sonya. We had an inside day today. All right. Today was an inside day. When you have an inside day, right?
when you have an inside day, the price is not giving you any clear indication that it wants to proceed up or down, right? And when price is not giving us any clear indication of what it wants to do, what do we do? Let nothing burger. What do we do when price is not giving us any indication of what it wants to do? What do? We wait. We sit on our hands. We sit on our hands. We wait. We take our phalanges and we stick them in our pantalones, in the pockets. We take our phalanges and we stick them in our pockets. We sit on our hands, right? We don't try to force anything when price is not showing us what it wants to do, okay? So now that we have now that we see we had this inside day, right? And price is in a buy program, okay? Now we've come here, right? And we've come up and we've taken out a daily high, right? We took out a daily high. We're in a buy program. We still have not reached the final target of this overall market maker buy model. Okay, we haven't reached the final target of this overall market maker buy model, right? But we're in a buy program. The buy program is still intact, okay? And then price. So since the buy program is still intact and we haven't completed the market maker buy model, right? That means if the order flow is, if we're in a buy program, that means the order flow is what? Bullish or bearish, right? Is the order flow bullish or bearish when you're in a buy program? Is the order flow bullish or bearish when you're in a buy program? Bullish. Bullish. Very good. It sounds like somebody said bullish. That's what I think they said. All right. So order flow is bullish, right? So order flow is bullish. We're in a buy program and we haven't reached the buy side liquidity to complete the market maker buy model, okay? Now, on a daily time frame, we've come up on this day here, Friday, we traded up and took out a daily high, right? This was Thursday's high right here. Friday, we took out Thursday's high. And then today we had a inside day, right? So when the market takes out the high and it's in a buy program, right? It takes out the high and it's in a buy program. Now it's not like rejecting off the high. It takes the high, right? And it starts to retrace. Okay. So now when it takes the high and just starts to retrace some, that's an indication of what? That's an indication that it wants to continue or it wants to reverse, right? So we trade, we take out the high and we retrace. Is that a sign that it wants to continue or that it wants to reverse? In a buy program, when you haven't reached the terminus yet.
So I think it wants to continue.
Yeah, it wants to continue, right? It's showing you that it wants to continue. The buy program is still intact. Why is that? Because it's taking buy side, retracing back to internal liquidity, right? So we're going external back to internal, external back to internal. It's showing you that the buy program is still intact. It's continuing to push through the highs, continuing to push through the premium PD arrays, continuing to respect the discount PD arrays. Okay, so now when price is bullish and it takes out buy side liquidity, right? It takes out buy side liquidity. What gives you the better opportunity to participate in the move? when price does what first before it makes the move? What do you want to see it do first before looking for your possible entry? Very good. You want to see it take out a low. Preferably a low from the same time frame, right? We took out a daily high. So preferably you want to see it take out a daily low before continuing up, right? If it's exceedingly bullish, you may not get the daily low because it may go so far that it's not going to retrace all the way back to the daily low. But in a case like this, when we've taken out the daily high, right, and then it gives us an inside day like this, that is a beautiful opportunity to maybe sweep out a daily low to continue up now, because we just engineered more sell side liquidity, right? We just created a new low right here. All right. And if we go to daily charts so that we can look at daily candles, all right? You see here what we did here on Thursday. We went up, we took out a high, closed down here. Then on Friday, we attacked the Thursday low and took out Thursday's high, right? Now that we've taken out Thursday's high, right? Coming back down and taking out Friday's low, right? That's kind of seek and destroy, right? But we set a new daily low on Monday. Now we got internal liquidity inside this range that we can sweep. We can sweep a daily low, right? So now we got external to internal. Boom, right? Now we got a daily low that we can sweep. Okay, making sense? Everybody tracking? Makes sense. Everybody tracking? Makes sense. Everybody, I'm sorry, I had glitched for a second. All right, so we already ran the fib tool. We know that equilibrium, right? We know that equilibrium is here. That's equilibrium right there, the line there. The buy side imbalance, sell side inefficiency here that I was watching last night. We opened up and price started to trade down. We pretty much made a beeline all the way down to that buy side imbalance, sell side inefficiency, right? At 6 o'clock, we open up, didn't give any type of chance to try to even go up, right? Start to trade down immediately, okay? Around 7:30, we retrace back up into an order block and then drop down, taking out the sell side inside of this buy side imbalance, sell side inefficiency, traded down into the wick of this bullish order block over here. All of these consecutive up close candles here, right? You got that high there, low down there, higher high, right? Traded back down into the wick of this huge, just going to mark it out here, right? This is the body to body right there of the order block. I mean, the breaker. That's the body to body of the breaker. Right there. And this right here is the wick of that breaker right there. Boop. Came down into the wick of that breaker, pushed back up, right? After midnight, we pushed up into the order block, creating relative equal highs here, right? So we got Asian high that was created here at 8:45, and we got a London high was created here at 2:30. right? So we got relative equal highs there. Then we dropped down, took out the sell side, right? We took out the Asian sell side, swept Asian sell side, and hit the bullish breaker, right? Hit the bullish breaker, hit the actual closing price of it, right? Not the wick. Okay, hung out here at equilibrium, consolidated there at equilibrium. Then at 7:30, we dropped down, took out the low, stayed there for a while. Then we propelled up here, right? The 10 o'clock candle at the 10 o'clock news, we went up and took out this high and created an equal high with the Asian there. So we took out the London high, created equal high with the Asian. Okay, once we created equal high with the Asian, right, we came back down, dropped below this candle here, dropped just below the 930 open, dropped just below equilibrium of the range. So it put us in a very slight discount, just pretty much came right back to equilibrium. And as you look right here, just below the 930 open. All right, came just below the 930 open. Once we drop down below the 930 open, price took us all the way back up to the new week opening gap, right? And traded up into the bearish order block from 445 on Friday, right? So traded all the way back up to the new week opening gap, respecting consequent encroachment, right? That dotted line, that's 50% of the new week opening gap. Respect consequent encroachment of the new week opening gap. That took from this like 1045 or so, because this is a 1030 candle. So between 1030 and 1045, price came down and then traded back up. And from that time, from 1045 up until 245, price slowly made its way back up to the new week opening gap. After reaching the new week opening gap, price moved back into a heavy sell program, trading down, not giving any opportunity to even attempt to retrace, except for when it first got the bearish breaking market structure. So it came down, got the bearish breaking market structure, small retracement back up on this 330 candle, traded back up into this 315 candle, and then we dropped down from 345 up until 430, just dropped down straight down back to equilibrium. Right, we came all the way back down to equilibrium, barely missed the 930 open, and then we just hung out there until 5 o'clock. Just hung out there in between equilibrium and the old monthly high. So price did a lot of moving up and down, but at the end of the day, we just opened up, came back down to a equilibrium, a area of fair value, did a bunch, hung around that area of fair value, went up, and then came right back down to that area of fair value. And that's where price is sitting right now. So we're still in the middle of the road, right? So we're still in the middle of the road. So price is in a buy program. So if you are looking to trade with the order flow, you'll be looking for reasons to buy, right? And the opportunities that you will be afforded, the better opportunities to buy, waiting for the market to engage sell side. Like I said, now we have just set a new daily low, right? This is our new daily low right here, right? We've just set a new daily high. This is our new daily high right there, right? So that's our new daily high. And that's our new daily low. Okay, now that we've set a new daily low, now price, we are in a discount of the daily range. This midnight line out of All right. So we got a new daily low. We are in a discount of yes. We're in a discount of the daily range, right? This is equilibrium. We're in a discount of the daily range. We are right here at equilibrium of our current dealing range, right? So we're looking at our current dealing range and we are right there at equilibrium, right? We're right at equilibrium because if you take the low that took out liquidity up to the high that took out liquidity, right here, wait a minute, that's not the, this is the low right here. That's the low. Yeah, that's the low there. Okay, so that's Friday's low, that's Friday's high, right? We're right there at equilibrium of our dealing range, right? This is our current dealing range that we're looking at. And this is the current impulse leg here where we took off, right? And if we look at our current impulse, if we go to the bottom of the leg, right, which would be here, body to the highest body, right? And we look at OGOTE, right? Let's extend this out to the right. All right. We look at OGOTE right now. We've come down into a 70.5 OTE, right? We came into a 62 here. Here we came into a 70.5 OTE. If we can get a sweep of daily sell side liquidity, we may be even to get a 79 OTE right there. We may be able to get a 79% retracement on OTE, right? And you say, hey, Tim, you don't talk about OTE a lot. What's make you talk about that? We've been discussing OTE for the Asian assassins, how to conquer the Asian model. And we've been discussing when should you be looking for OTE, right? Right. And not to get too deep into that, that's based off of the lecture that we had the other day, right? This is an area where you be looking for an OTE, right? Current dealing range, last impulse leg there, right? But current dealing range in our market maker model at this area of reaccumulation, right? So got our area of reaccumulation, right? We got our impulse right there, looking at the OTE, right? Looking at the OTE right there. Came down to a 70.5, right? If you trade OTE, this rally right here, and then stopping and coming all the way back down here, oh, that's that hurt. That's that pain, right? But this is a part of being at 50% at equilibrium. Price is going to engineer liquidity, right? This right here, that pullback there, it's forcing out weak longs, right? It's enticing shorts, especially if we come take out this daily low. Oh, that's enticing shorts, right? Not saying that it's going to keep blasting off, but when you're in a buy program, you trust the process until proven wrong, right? You trust the process until proven wrong. And right now, this is your dealing range. So anything inside this dealing range that offers you a buying opportunity, right? You're looking to buy. Okay. Once you trade outside of your dealing range, now, right, you're like, okay, I need more information now because I've traded from external liquidity to external liquidity. I'm no longer in a buy program. I just showed signs of a possible reversal. What is this reverse? What is this external liquidity being taken for? Is something on the higher time frame that's down here that price needs to get to that would warrant me breaking outside of the dealing range that I'm watching right now. Right? If there's nothing down here that warrants that break, then you say, okay, I'm on the wrong side. Let me look for if price gives me an opportunity to sell. Right? But you don't just immediately flip your bias once that happens, once your invalidation point hits. Now you want to verify what's going on, and you want to have that already picked out before you even start. You want to know, why is this the invalidation point? Because if we hit here, that means we're trying to come to X, Y, or Z. Yeah, man. All right. That's all I got, man. That's all I got for the price action recap. Right. Hopefully y'all found some value in this. You know, I tried to keep it concise without a whole bunch of flabber blabber today, without a whole bunch of gun flapping. Do anybody got anything for me? Mm-hmm. Anybody on the gram? Anybody on the gram? Gram, y'all gone? Anybody on the gram? Seen somebody on there, they left. Nobody got enough for me. Good stuff. Appreciate that. All right, man. If you're part of the Diamond members, this Wednesday is our monthly lecture. Hey, guess what? We're going to be talking about something that we just looked at not too long ago with the Asian assassins. Somebody put in the lecture request channel, lecture suggestions channel. Somebody put in there how to identify setups in the Asian session and pre-New York Open. All right. So that's our next lecture. And we just now the pre-New York Open, we talked about that today, but the Asian, identifying the Asian and the pre-New York, they it's pretty much the same thing. They're pretty much the same thing. And it was all, like Michael outlined it. The pre-New York, you may know that as the Caleb model. You may know that as the Caleb model. If you hear anybody talk about the Caleb model, that's when Michael broke down how to look at the New York pre-market session for New York. But when he gives stuff a fancy new name, everybody will, oh yeah, I got Caleb's model. I know I trade Caleb's model on Caleb's model, blah, 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 blah. You know what I'm saying? And then when he broke down how to look at the Asian market, oh, the Asian model is no, it doesn't fail. The Asian model is the best. Oh, wow. But it's the same stuff he's been saying over and over and over and over and over. But we're going to be talking about how to identify trade setups in the Asian and New York pre-market. Hey, a nice refresher. Nice refresher. But that's what's on the what's the name up next. And then after that, something about IPTA. I haven't really read that thoroughly. Utilizing IPTA for the daily and 4 hour back 40, check the 4. Okay, talk about IPTA And then after that, higher time frame trading and entry methods on the foot. That I mean, this stuff we talk about all the time, but yeah, this is what we gonna be. Those are the lectures.
Don't be doing me like that as soon as I log on.
Hey, look here. don't be asking stupid questions.
That's a specific question with a very detailed.
How about that? How about that? But yeah, that's what we going. So Wednesday night at 7 is we're gonna be doing a lecture. It's gonna be pretty much a repeat of what we just went over in the Asian assassins for I think it was Asian signatures was the name of the video, and then it's just gonna include the stuff about New York pre-market, the Caleb's model. Like I said, we touched on that. We touched on that a little bit today because we was talking about Michael's Twitter space from this weekend, and I was just breaking down how we don't want to reinvent the wheel. Everything he said in his Twitter space is stuff that he said time and time again. So don't make it something new. You already know it. You already know what he was talking about. You just don't know that you know it. Right? The only thing he was saying is looking back a specific period of time. How is price engaging with liquidity looking back one specific period of time? That's it. The same thing we do every day. When we go into the daily chart, we look at how are we interacting with yesterday's high and low. How are we looking at how is New York interacting with London's high and low? How is New York PM interacting with New York morning's high and low? How is New York morning from 9:30 to 11 interacting with the pre-market from 7 to 9:30? And you're just looking at very specific windows of time, right? Don't reinvent the wheel. Don't overcomplicate it. Don't make yourself think, oh, it's something fancy and new out here. No, it's not. It's the same old thing that you already know. Continue to study like you always studying. Use it as confluence. Like, hey, man, I already know this stuff. When he come out with stuff that you already doing, just pat yourself on the back and say, self, you got this. All right. That's it, man. If ain't nobody got none, we're gonna call it right there. Appreciate y'all for hanging out with me. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo español. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Y'all be safe out here in these trading streets, man. God